Welcome to part 3 of this Financial and Economic Ninja update. What we're finding so far is that numerous indicators are pointing to crisis coming this year, September, October, November. We're going to continue with this analysis and then I'm going to draw some conclusions at the end of this presentation. And then we've got another part of the bigger picture, which is the US junk bond. This is the most risky bonds in the market. Their yields dropping below 4% for the first time ever. So if inflation rates are really officially 6% or so, but the real rates are more like 13%, then you're paying for the privilege of taking risk, and in this case you're paying about 10% a year in real terms for taking high risk. That's how far out of whack these markets are. So we have lots and lots of precursors, lots of early warning. The fact is the governments need another excuse for multi-trillion-dollar currency expansion. If not, the market's going down the pan. The minimum picture we're looking at is probably stagflation. That means huge price increases plus economic stagnation. Another potential option is a market crash, which is deflation. And what we could end up with is asset deflation, which is stocks, pensions, houses, land going down in value, plus need to buy inflation. What I mean by that is food, soap, toothpaste, toilet rolls. The people need to buy to live. So their house prices could be crashing and food and other things could be inflating. Why is this important? Because we've already seen the start of the hyperinflation. That was the currency production last year. We've already seen that go into certain sectors. And that feels okay. If you own a house and your house is going up in value, that feels fine. But it's when you see your food prices going up, your daily costs shooting up, then you realize there is a problem with the currency system. And that's when the psychology catches up. And that is on the way. And when that happens and you realize that your purchasing power is going down and your assets are also going down, then what do? You preserve value by spending your money as quickly as possible. And that's when the switch flicks from inflation to high inflation to hyperinflation. And back to Mark Twain. It happens very slowly and then all at once. And we may have a leading indicator here from McClellan Financial Publications. This is the near month gold futures shifted forward 20.5 months. Why is that? Well, what we're seeing is a correlation. And what it's showing is treasury yields falling, which is the price of treasuries, the bonds, rising, followed by a switch. When's the switch projected for? September, October, November 2021. So the summary is, it's all lining up, including short-term indicators, the Fibonacci cycles forecasts and the past predictions, the technical analysis forecasts and the Elliott wave theory, the issues of the bank deposits versus loans and the fact that that echoes the pre-Lehman Brothers situation, the commodities cycle, the reverse repo market, the banks sending money back to the Fed because they don't want to lend it out, They're doing the opposite. They're calling in their loans. The junk bonds, the highest risk market there is, yielding below even official inflation figures. The hedge funds piling into the markets, which is the dumb money because they always get it wrong. The gold futures versus the treasury yields. The really big picture stuff, the 100-year cycle top. And the January fiscal cliff, the end of epic stimulus in the US, equivalent to 25% of GDP. And the monetary cliff, quantitative easing, being talked about at least, going to zero in 2022. Whether that will happen or not, we don't know. But what we do know is that the Federal Reserve, when it started to taper, so not even to remove QE from the market, but just to throttle back in the amount that was being produced, led to a tantrum in the stock markets a couple of years ago. So we might appear to have some contradictory information between the cycles and the technical analysis. So what about crypto? Well, my observation is that sometimes there is contradiction between the cycles forecasts and the TA, but it's not often, it's sometimes. And mostly both of them are reliable. They're more reliable than they are unreliable. The cycles can get thrown off a bit by manipulation, and there seem to be other issues with cycles with regards to nailing the timing. But the TA analysts, Crypto, Carl at the Moon, DaVinci J15, they're my favourites, and they will say when they don't know what the situation is. And that's because with Elliott wave theory, sometimes there is sideways trading, which is less predictable than the Elliott waves. So what does Elliott wave have to say? Well, the Elliott Wave Institute at the moment suggests that there are 2 more Bitcoin waves to come, and that is the most likely scenario. Sometimes you have to wait to see which scenario involves of a number of them, but this would align with my thinking on the situation as well. So that's what I reckon is going to happen. We've had a wave 1, a correction. Now we're waiting for waves 3 and 5. So the biggest waves are still outside crypto, and lo and behold, today, at the time I'm recording this, the US Congress has smuggled in a bill to create a central bank digital currency. So this indicates the trend. Mass adoption is on the way, and it's already happening at twice the rate of the internet. In the meantime, the stock and bond markets look to be on a precipice, and there are multiple confirmations of that. And if there is a crisis, gold and silver may become unobtainium again overnight. That happened last year, and supplies are still restricted. And if that's the case, then the only flight to safety play for most people may be crypto. So the facts are that gold, silver and crypto have been manipulated down. We know this from the Wyckoff cycle earlier this year. But my reading of the situation is that they have a historic future role, and that role will happen soon. So Elliott wave theory predicts that wave 3 or wave 5 will be bigger than wave 1, and wave 5 will be the blow off top. So it looks like we're currently just starting wave 3. So far, the altcoin strategy seems to be well on track, and in fact there was a video produced by DaVinci J15 today saying that he's holding on to all of his altcoins because when they rip, they really let fly like rockets. I've looked in depth at the altcoins, the top 100 from 2017 and from 2021. And the interesting thing is that they show repeated top patterns. The same coin will show the same pattern, and the same pattern will be reflected in numbers of coins. There are different patterns though, different groups effectively of coins with different patterns. So to one extent or another, the situation looks to have some predictability. And it's interesting to me how often Crypto, DaVinci J15 and Carl the Moon have been right using analysis and Fibonacci measurements, absolutely nailing the key points and explaining when to take profits. So for me, the earlier manipulation of the Wyckoff issue didn't make sense as being the market top, because it wasn't the shape of a market top, and we were still waiting for the retail buyers to fire up and for that mass adoption to really open up. So what we've seen is the big commercial interests getting involved in crypto. People like Fidelity, who've got over $10 trillion in funds under management. So what if they put 15% of their funds into crypto? Well, that's $1.5 trillion being added to a $2 trillion market. So what I suspect is that the markets will really open up for the retail phase, for the blow off top, and on that basis they will really blow the top, and that will enable Wall Street, call me a cynic, to be able to manage funds on behalf of a lot of people and to get their fees. And I would also not be surprised if there is some kind of a crypto ETF, one or more, released before that time, because that's the way the markets make money, and they want to make money from ordinary people. So half of Goldman's ultra wealthy clients will be adding crypto to their portfolio. Ka-ching! That's 4 times more than now. The Bank of New York Mellon joins the world's largest custody banks in cryptocurrency trading support. 650 US banks will soon be able to offer Bitcoin purchases to an estimated 24 million total customers. JP Morgan becomes the first bank to give retail wealth clients access to crypto funds. This is all in the last few months. Here's the Pi Cycle top indicator, and again what we can see is the tops for 2014, 2017, 2018, and both in terms of the timing, that 4-year period, and in terms of the shape of the top, we are not showing a topping pattern so far. It's yet to come. And my feeling is, because the market's been suppressed, it's quite likely to be a double top kind of situation as we saw between 2012 and 2014. And on that basis, we could be looking at something really epic. So what are the possible likely outcomes from this situation? The first one is disinflation, which is falling inflation. Falling house prices, the return to normal of second-hand vehicles, etc. So in the UK and in the US, what we've seen is that second-hand vehicles have often been selling at higher prices than new vehicles because you just couldn't get the new vehicles. So disinflation, first of all, is what was suggested by Michael Pento, and it makes sense to me. And then deflation, which is a stock market crash. And in that situation, I see everything falling, including gold, silver, and crypto, temporarily. Because when people are trading on margin, when they're borrowing money to trade and at leverage, when their stock positions get wiped out, they have to liquidate their portfolios. It happens to professional traders as well, and it happens every time. And when that happens, they sell everything in order to be trading again, and then they make the safety plays. So the predictable response then to that kind of scenario is going to be absolutely epic currency production, and I think that that's really going to be the final straw leading to hyperinflation. And I think we're already going to see with our own eyes high inflation in the shops. In the immediate short term, we've had the politicians talk about Christmas being cancelled, not being able to buy presents, maybe not being able to buy certain foods, meat, etc. I'm expecting probably multiple currency revaluations. A currency revaluation 1, they'll try and keep a lid on it. There could be 2 or more, but eventually what I believe is that the amount of currency produced will equal the gold. So that means a stupendous drop in buying power of currency, a stupendous rise in the value of gold. And that's really going to signal the start of the gold bubble. And we'll know when gold is in a bubble because everyone will be talking about gold. I also see the possibility, due to this mass adoption, of the market becoming less volatile in future, and as Willy Woo says, perhaps the end of the Bitcoin cycle, or a highly modified Bitcoin cycle of 4 years. So what does that mean? It means that we are possibly unlikely to see another 1 year bear market with an 80% drop again. It might be a shorter bear market, or it could be a smaller drop, or both. So what am I doing? I can just explain the way I look at things personally and how I'm dealing with things. So I'm getting crypto debit cards. I'm getting several because I intend to keep liquid. This is important. If you're in crypto, you need to be able to cash out quickly, to pay off loans, overdrafts, take advantage of opportunities of fire sales, etc. In the meantime, as I said, I don't believe we've had the blow off top. I think we're in for 2 more waves. If we're in for 2 more waves, then I wouldn't be surprised at a 2 to 3 times move from the previous high, then another correction, and then a 10 times move towards the blow off top, because hey, that's what happened in 2017. So in the meantime, I'm hodling, and as and when I get more funds, I'll acquire more crypto as I can. But I also intend to take some profits. I intend to convert some crypto to silver if and when I get the chance. Why is that? Diversification. We need to think about all sorts of possibilities in a situation like this, and one of the possibilities could be something like a Carrington event, which is where there is a solar flare and it knocks out a lot of the electrical capacity and computing capacity on the planet. So it's up to you how much risk you want to take, but to me, I'm thinking, well, if silver has a 100 times upside, then I don't really mind taking a bit of a hit, taking some profits out of my crypto, maybe missing out on a 10 times move from that money that I take out, and then maybe acquiring some more absolutely at the top. So you need to decide what you need to do in this situation, and what your appetite for risk is. But there's an option. The option is, if we're into wave 4 next, wait for that to peak, wait till you're into all-time highs in some of your coins, cash in some of the profits and get some silver. You could do exactly the same thing on wave 5, or you could wait for wave 5. It's entirely up to you. The way I look at this financial and economic situation is that the safety plays at this moment are really something that we should be bearing in mind, because when the system collapses, it's going to collapse hard and fast, and that's certainly according to what Bob Prechter says. So if the market is going to bottom next year, then, and we're talking about a potential 85 or 90% crash, then it's going to happen really hard, really fast, and we can expect 5 waves down, according to Elliott wave theory, which is the change of the trend. So the safety plays are physical gold, physical silver, cryptocurrency, and food and household essentials. So my intention then is to cash out of crypto at or near the top. We'll cover this in a few minutes, and then to go into some metals, but also to convert everything else from my crypto into a gold token, a cryptographic gold token, to preserve the wealth that I've got, what little there is, because if we're looking at 14% inflation at the moment, then what could it be in a year's time? We don't know, but it could be a lot higher. So my observation is that when the market crashes, the only option for most people will be crypto. Why? Because people won't be selling silver and gold, and on that basis they won't be able to get hold of it. So gold, silver and crypto are all counter moves, and they may go down before a crash as well. I've expected them to be held down they're still bargains. It may be that this suppression that we've seen a drop recently in gold, a drop in silver, and a drop in crypto. It may be that they've all been pushed down because a crash is very imminent. Only time will tell. But one thing's for sure, gold market paper manipulation is ending fast. It's already ended in some markets, and the London market is due to finish this by the end of the year. New international banking rules coming in. But crypto may also be virtually unobtainable for many people due to blockages at the crypto exchanges. And that will leave them the option as to go to Wall Street, Fidelity, JP Morgan, etc. Do you think that's a possibility? I think it's a possibility. So on that basis, the major financial institutions can absolutely cash in. And if all that was just coincidentally due to happen immediately around about the time of a crash, maybe a bit after a crash, then there are also potentially crypto ETFs, then what's going to happen? It means that there's going to be an absolute explosion into crypto on the blow off top, and potentially then that crash will happen. So there are some final big issues to run past you, and that is, hey, it's very, very important and useful potentially to time the tops. Why is that? Because in 4 days after the top of Ethereum in 2017, 2018, the last cycle, Ethereum lost 27% in 4 days. And it was then at the same price as it was a week before the peak. So a week before the peak saw a 34% increase to the peak. So this is going back to the importance of the patterns and the charts that I've looked at. And I do believe with some extra support, some training and some analysis tools, it might be possible to do better than just dollar cost averaging, because these patterns are repeating. And I think if it's possible to nail the tops on a few of these coins, then that could be very, very valuable. The next issue is tax. That could wipe you out completely. If you are booking big wins and then you have the taxman come knocking and the market is going down and you're still holding crypto and it's going down fast, you could end up paying all of your profits to the taxman. So that depends on value, the valuation of the crypto at that time, how much it descends, and the timing. So there are solutions, I believe. The solutions are to apply the Fibonacci measurements, the technical analysis, and use them on the altcoin chart indicators. If anyone wants to support me on this, then please get in touch. And the other option, I believe, is do exactly what the rich people do, which is transfer your ownership to an offshore trust where it can't be taxed. Because the way I look at it is, if 40% of Americans don't have $500 saved, then they're not going to pay the national debt. The rich people and the major corporations never pay their share of the tax. This means the middle class are going to get wiped out. So if you want to be in the donor position, then I assure you, you're going to get wiped out. Gold and silver could take a hit until and shortly after a market bottom, according to Bob Prechter. If so, I'd be surprised if they go below the previous recent market bottoms, and they were $1,400 an ounce gold in 2015 and $12.50 silver in 2020. However, if they went down to meet those levels, I wouldn't be that surprised, and that would make a double bottom. And a double bottom is often a sign of a rocket trip to come. So you just need to bear all of this in mind and have the flexibility of mind to be able to deal with it. So if gold and silver do come down, according to the Bob Prechter analysis, and if they do hit the same double bottoms, I expect that will be before 2022, and for them to take off hard and fast. So that might raise the question in your mind, well, why would I cash out and put crypto into a gold-backed token? Well, the answer is that that would be, I don't know, something like a 20% reduction in value, maybe a little bit more. Well, if we've currently got 14% inflation, that could rip through the roof over the next few months. When inflation moves, it was always described to me by my economics teacher as like a brick on a piece of elastic. It doesn't move and doesn't move and doesn't move, and then it absolutely jumps. So we need to bear this in mind, and on that basis, I think moving into tokenized gold at the top of the crypto market is probably going to be a sensible move. So forewarned is forearmed. I'm just trying to share the research and the issues with you. You have to make your own decisions. I share what I'm planning to do, but I'd encourage you to remember Isaac Newton and to bear in mind, if you're in crypto, your experiences of the last year or few months or whatever. What happened to Isaac Newton? Well, Isaac Newton was a fairly bright guy, but he realized in the South Sea Island bubble, because bubbles have been going on for all time, basically. But he realized that things were in a bubble and the prices were unsustainable, and he pulled his wealth out of the market. And then he saw the markets going up and up and up and up. And then he FOMO'd and he put his money back in the market right before the top. It crashed spectacularly and he ended up losing everything. So always make sure, if you're betting on one side of a situation, you have enough on the other side of the situation to mitigate the position. But what I believe is that we are playing the big waves here, and it takes patience, it takes courage, it takes being relaxed about the whole thing, just to realize that all we have to do is to wait for the big waves to come, and then to know when to exit one wave and jump onto another one. So in summary, I'm expecting big things still from crypto. From there, it's very important to try and optimize your exit and go out into in my belief, a gold-backed token, cryptocurrency, to either wait for the bottom of the crypto market, but to observe the coins that you've been in and see if any buck the trend and take off, in which case maybe put a little bit back in, but it helps to know what's happening in terms of Elliott waves and things like that, because otherwise it might be confusing which direction these waves are actually playing in. And then opening up the possibility of going back into the market at the very lowest point using the cycles analysis and the technical analysis. So basically you've got very little downside and only upside. But in the meantime, we also need to observe what's going to be happening with stock markets and with the housing market and things like that, because if your objective is, for example, to get a house, then the potential is then to get 10 times leverage if you're picking up a house at 10% of the cost if the market has dropped by, say, 90%. And that is exactly what has happened in history. So hopefully you've enjoyed the presentation. For those who are involved in the private groups that I support, I will be doing some Q&A sessions next week on a private basis. Thank you for watching.